Hi, this is A.K. Aslani from Smart VRC, and today is the webinar number 97. Almost 11 months are over since the day we started the webinars. Of course, we are celebrating 21st year of Smart VRC. How to create luck in stock investing? A very interesting topic. So to start with, are you lucky in stocks? So there is a poll. I'm starting a poll. So it is on your screen and you have to opt the answers. Only two options are there, either yes or no. Are you lucky in stocks? So 79% of the participants have voted. Still 21 are left. I request all of you to please participate. It's going to be pretty interesting. So it is very close. 49% are saying yes and 15% are saying no. Okay. Now 87% of the participants have given their view, and here is the result. It's 50-50. 50% say yes and 50% say no. So it's as good as flipping a coin. So 50% are lucky and 50% are not lucky. Okay. Let's move ahead. So what we are going to see in this presentation is what is luck, luck in short term, luck in long term, and steps to create your luck. Can you really create your luck? Let's see. There is a four-leaf clover, as many of you may be knowing that. It is very, very difficult to find this type of clover with four leaves. Three leaves are available, easily available, and plenty are there. But with four leaves, it is really very, very difficult. And the chances of able to get four-leaf clover are 1 in 10,000. So whosoever is able to get this four-leaf clover is considered to be lucky. Of course, when the luck comes in stock market, often investors say that I am not lucky. It's a bad luck. मेरी तो किस्मत में ही नहीं है और मेरी राशि ही सही नहीं है. मैं स्टॉक मार्केट के लिए परफेक्ट नहीं हूं. मेरा लक ठीक नहीं है. अच्छा शेयर मेरे हाथ में आया था, मिस हो गया. Okay. Of course, I was holding a very good stock, but somehow I exited and later on it turned a multi-bagger. So that is a bad luck. What the Robert Kiyosaki has to say, I hope you all know Mr. Robert Kiyosaki. He is the author of the book Rich Dad, Poor Dad. Few people realize that luck is created. He says that few people realize that luck is created. What does he means by that? Now let's watch a small video clip of Mr. Kapil Dev, and I hope most of us we know this superstar cricketer and a good, very good all-rounder, excellent all-rounder, what he has to say and how it is related with us.
Of enterprise जो है लाइफ में I really admire it क्योंकि you're a serial entrepreneur और आप जब से रिटायर करे तब से you have a head for business. ये कहाँ से आया? Where do you think it's come from?
जब मैं टेस्ट क्रिकेट खेल रहा था तो हमारे मैनेजर थे चंदू बोर्डे. ही वाज अ फॉर्मर इंडियन कैप्टन,
Yeah.
वो था। एंड हम बॉम्बे में टेस्ट मैच जीते, तो चंदू भाई आके बोले मैं जा रहा हूँ पुणे एंड आई सी यू द नेक्स्ट टेस्ट मैच। तो 3 घंटे के बाद देखा चंदू भाई अभी वहीं हैं। बोडे साहब, मैंने कहा बोडे साहब आप गए नहीं, आप तो पूना जा रहे थे। कहते नहीं, वो ना सेक्रेटरी बोर्ड का वो सो रहा है, वो उठेगा तो मेरा डेली अलाउंस देगा। उस एक स्टेटमेंट ने मेरी जिंदगी चेंज कर दी, इसलिए कि यार ये हमसे भी बड़े क्रिकेटर थे अपने टाइम में। आज ये नौबत है कि ही हैव टू वेट फॉर हिज डेली अलाउंस टू गो बैक, एंड दैट इज द टाइम आई स्टार्ट थिंकिंग कि नो, ओपन योर माइंड, कि क्रिकेट ही सब कुछ नहीं है। क्रिकेट छोड़ने के बाद ऐसी कभी नौबत मेरे को आई तो बहुत बुरा होगा, क्योंकि जब आप खेल रहे हो तो योर थॉट प्रोसेस और लाइफस्टाइल इज हियर।
Yeah.
बट अगर इससे नीचे आ जाएगी तो यू विल स्ट्रगल, यू विल बी बिटर एंड you will be unhappy man.
So this was the message, and this is how, when the opportunity comes or when you come across such a situation, you take a decision, and people say that you are lucky. When I started in '89, and this is a chart from 4th of January '88 to '93, April '93. Why I am showing you this chart? Because when I started, that time index was something about 750 level, and in 1992, 91, 92, it touched about 4,400. So it was a multiplication of 6 times, right? 6 times multiplication in a matter of only 3 years. That was a very, very big boom. 6 times multiplication in a matter of only 3.5 years. And not only that, post that 4,400 level, market came down, rolling very fast, and came down to about 2,000 points. That means a fall of about 55%. The fall was very severe, and my portfolio, my investment in stocks came down from about 1,80,000 to mere 21,000. Yes, from 1,80,000 to mere 21,000 rupees. So when I look back, what I believe is I was very lucky. I was lucky to face a boom, a big boom of 6 times multiplication in Sensex in a matter of 3 years, and then a 55% decline within a year. So I met with Mr. Boom and Mr. Doom within 3 years. It is very, very crucial for an investor to meet with his first crash. When I say crash, it should be no less than 45% or 50%. That is the real crash. 45-55% in Sensex. That is the real crash. Then you come to know what is the risk in stock market, and from there on, you start doing the right things. First, you look for what is the risk associated with it. So that is the way I look as far as my investment journey is concerned, as far as the luck is concerned. So as per the dictionary, the definition of luck is success or failure apparently brought by chance rather than through one's own actions. Yes, it is a single event, which is a luck. When we flip a coin, suppose in cricket, as we know, who will bat first is decided by, or who will bowl first is decided by flipping a coin by captain. So it is a luck. It can be a head, it can be a tail. So in the luck in the short term is a single event. So you can be a beneficiary, or it is neutral, or you may lose. So it is a bad luck. So all this is with respect to the index. So we have to refer to something. We have to compare with something. So here I have compared with BSE Sensex. So for a single event, if you are doing in a single event, if you have done better than the Sensex, then it was a good luck. If you did at par with the Sensex, then it was a neutral. And if you did poorly with respect to the Sensex, then it was a bad luck. Now, there is a single event, right? What happens in a series of events? Now, if we consider these are about 20 cases, so 20 events. So I have named it a series of events, and all are neutral. All are neutral means this is representing BSE Sensex. Okay, you are neither performing better than the index nor worse than the index. So this is a neutral. Or what you can say is, if you are invested in Sensex ETF or index fund with BSE Sensex as the underlying index, then your state is like this. But what about those who are investing on their own, those who are investing directly? So this is a general case. There are less success and more failures. There is no particular, in this case, whatever I have shown is there is no series of any successes or failures, but a kind of a random thing. But most of the time, it is the failure. There is one more case, and as here you can see, it is more of success rather than the failures. So if you look back whole this series of events as a single event, right, then the first one is neutral, second one is lost, that is underperformed the BSE Sensex, and third one is outperformed the BSE Sensex. So if we have to say who is lucky, then first one is neutral, second one is unlucky, third one is lucky. But as you can see, it is a series of events. So it was not a single event which decided whether you are lucky or not. So individually, for every event, you have to take a call. Then only you become lucky or unlucky. If you are not taking any call, then it is the first case, that is the Sensex. So this was all about luck in the short term versus long term. Now, what are the steps to create luck in stock market? Start early. As you must have heard again and again from the books, in the videos, in the articles, then one must start early. Why? Because of compounding. Many people know that it is because of compounding, but actually few people only realize how it impacts your returns. Let's see. Now there is a investment of 1 lakh. Sorry, it is written as 10 lakhs here. It is a typographical mistake. It should be 1 lakh. So it is an investment of 1 lakh at 26% per annum for 10 years. So this is the chart, and as you can see, it keeps on rising, and the rate of growth of the gains, rate of growth of the total sum increases as the time elapses. It is because of the compounding. Whatever gains you made in the year 1, those gains also get added in the year 2, and so on and so forth. So in 10 years, your investment of 1 lakh would cross about rupees 10 lakhs. 1 lakh investment will cross 10 lakh in 10 years if the returns are 26% per annum. Okay, so far so good. And here I have a chart for you to show you that almost in a similar fashion, Smart Billionaire Picks, which is a part of Smart Gains, our product, weekly product Smart Gains, that has also delivered very close to 26% CAGR, and that was started with rupees 1 lakh on 30th of May 2001, and as on date it is about 96 lakhs, and that has delivered a compound return of 25.89% CAGR. Yes, we have delivered In a public domain basket, we have delivered returns of almost very close to 26% CAGR. Now, what happens if we increase this investment horizon of 10 years to 20 years? If you increase it from 10 years to 20 years, as you can see, 1 lakh will grow to 100 lakhs. In 10 years, it was 1 lakh to 10 lakh. In 20 years, it is 1 lakh to 100 lakhs. Also, there is one more pattern which you must have observed, that the returns are more in the later years. Right? Now, what happens if we increase this horizon to 40 years? Now, with 40 years, 1 lakh investment will grow to 10,000 lakhs, that is 100 crores, that is 1 billion. And Smart Billionaire Picks is on this path, way to billion. And that is how the name of the book authored by me is Way to Billionaire. And now you can see very clearly that majority of the gains are delivered during the last 6-7 years. So that is the power of compounding. Let's see all these three charts together. So now you can see very clearly how the chart is skewing towards the end. This is for 10 years, this is for 20 years, this is for 40 years. So that is the message. Start early. Not only you have to start early, but you have to stay long. That is how one can become lucky. Right. So first was start early. Second is know your risk profile. Yes, many investors have entered during last 1 year into the stock market, and they are fresh investors. They are new investors. They do not know the risks involved, because whatever they have seen is upside. On 23rd March, exactly a year ago, Sensex was about 26,000. Today it is 48,000. So what they have seen is only one-way market going up. But you must know what is your risk profile. And for investors, we have created a very simple questionnaire of 20 questions on our website, and that is accessible from this top menu resources. There you will get risk profile, and this is the risk profile. You have to enter. It is a multiple choice question, and you have to enter only one answer, and it is a matter of, I think, not more than 2 minutes, and you can find out what is your risk profile. That is very much essential. So start early, know your risk profile, and trust the corporate. Corporate means the companies, right? In our case, it is the listed companies. Corporate cannot fail. Why? Because of multiple reasons. The foremost being, everything is dependent on the corporate profitability. Our salaries, the tax collected by the government from the corporate directly as well as indirectly, the banks, they are lending to the corporate, and everything is directly or indirectly connected with the corporate. So no government will ever allow the corporate sector to fail. It will always try to boost up the corporate sector, because it is the profitability of the corporate sector which moves the economy. So you have to trust the corporate. You have to trust the economy. The next is be always optimistic. Yes, always be growth oriented. How further I can grow my money, how further I can increase the gains. That is the way to gain confidence and for success in stocks. Now, this is the BSE Sensex chart from 3rd of April 1979 to till date, and you can see at no point of time had anyone invested, he had never made a loss. I'm talking in terms of Sensex, not in terms of individual stocks, because when you invest in individual stocks, it is not only the Sensex, but it is also the performance of the company where you have invested that decides the returns. Okay, in the short term, it is the market which decides the returns, but in the long term, it is the company's performance which you are holding stake that decides. So there is no reason to be not to be optimistic. And as you can see from the old record of more than 41 years, that no one has ever lost had he invested in Sensex. So look for the opportunities under any circumstances. There will be different type of circumstances. Sometimes it will be too optimistic, too good to be true, and sometimes too bad to be true. And at times it is just neutral. But in under any circumstance, there are always opportunities. Definitely, whenever the market moves up sharply or moves down sharply, that represents the biggest inefficiencies in the market, because that is the panic state. And that time you should be very, very careful. Now, this is the again BSE Sensex for last 41 years, and this is on log scale, that is the logarithmic scale. And as you can see, the opportunities, the great opportunities when the markets have jumped too fast. These are the green points I have mentioned. These are the great opportunities. At the same time, there are opportunities on the downside also. These are the red, indicated by red circles. And as our subscribers and many of you know that we are purely based on fundamental analysis. Our advice is purely based on fundamental analysis. And it was on 16th of March last year and 17th of March again last year when we recommended a number of stocks in one go under smart gains as well as smart multi-bagger. Normally we recommend only single stock, only one stock we recommend, but that was a very unusual event and we recommended 4-5 stocks at a time in smart gains as well as multi-bagger, because it was a great opportunity, to acquire the stocks at rock bottom prices. We were not knowing that the market is going to take a turnaround, and within 5-6 days market turnaround, that after 5-6 days the index level of about 25,900 turned to be the bottom. We were not knowing that. What we were knowing that the stocks are available at throwaway prices. Grab them. And we put the stop loss at such a ridiculously low levels that investors were worried. Why stop loss is so low? I said that let it go down. We are going to hold them. So that is the way to have and grab the opportunities. So one is you get the opportunities, look for the opportunities, but you have to also grab the opportunities. You have not to only look. And also when you are grabbing the opportunities, grab with a big bucket, not with a small thumble. So grab with both the hands whenever the opportunity comes. Such opportunities come at very, very low frequency. I shall tell you in this graph. As you can see, during a span of 41 years, there are only 5 opportunities. So on an average, once in 8 years, such opportunities comes. And I call them as the pearls. People are very afraid. People are very nervous whenever the market crashes by 40% or 50%. But believe me, these are the opportunities like picking the pearls. You will get 8 to 9 opportunities. An average investor gets 8 to 9 such opportunities in his lifetime. So don't let go such opportunities free of cost. You have to grab those pearls and accumulate those pearls, because they make a big difference in your returns over a period of time. Embrace failure as inevitable. Yes, failures are going to be there. You cannot stop it. Only you can reduce them. And you have to accept it that yes, failures are going to come. you cannot be 100% sure and you cannot get 100% success rate. I would say that success rate of about 6 or 7 out of 10 is extremely good. Why it is extremely good? Because when we are making a success in 6 or 7 out of 10 stocks or 10 picks, then those success rates should be way higher than the losses in the remaining 3-4 stocks. So if we are restricting our losses to about 20% from our purchase price, and if we are getting a success of about 60 to 70% in each of the success stocks of 6 or 7, then we have made it. We have done it. It is extremely good ratio. Well, we are on the halfway, and here is a small video of our activities, what we do at Smart VRC. Well, that was all about our activities. And one favor I want from all of you is that, as you may be aware, we are regularly hosting this webinar on every Sunday. And if you have your friends or investor friends, investor contacts, investor relatives who are interested, they can send us a request with their name and city, to this mobile number 9755 920 780. So we were discussing about the steps to create your luck, and we covered these steps. The next is learn to dance with fear. Yes, without dancing with fear, you cannot achieve a success. That is a basic principle, not only in stocks, but everywhere. You must know how to dance. You need not have to fear from fear. Now, how that confidence comes that you can dance with fear? That confidence is related to three types. One is the market, or the market perception. Everybody is fearing about the market, where the market will go. Will it go up or down tomorrow? What will happen day after? What will happen after a week? So we are very much bothered about the market because our perception are like that. If the market goes up, then only my stock will go up. Yes, it is true in the short term, but in the long term, no. It is the stock. It is the number two. It is the stock. It is the fundamentals of the company you are holding, or the story in times to come. What is the expected performance from the company you are holding? And also, your returns are basically decided by the total portfolio returns. It is not the stock individual, but it is the sum total of all the stock returns multiplied with their weightage that decides the portfolio returns. So you have to have confidence on all these three parameters, then only you can dance with fear and get the success. And it is a continuous process. But dancing with fear for the first time is really very, very difficult. And it was during times of depression in the market, we regularly give our advice to the investors in our WhatsApp groups, also to our subscribers, and also in seminars. It was in late 2019 that we hosted a seminar in Rajkot, and the topic was how to dance with fear. You won't believe the total sentiment was very poor. If you can recall, in the late 2019, sentiments were very poor, and we got very good response for the seminar, for that seminar. So how to dance with fear, we have to learn, and that comes through experience and wisdom only. And that is why I said I was lucky that within 3 years I met with a big doom and big boom. The early you meet with these two guys, the better it is for you. The more lucky you will get in long term. Another way is to hire a good advisor. Yes, it is not essential that you need to invest on your own in stock market, because of course it is simple and it is easy also, but it takes time to understand the nitty-gritties of stock market, the nitty-gritties of the movement of the stocks, and the way to find the worth of the stock. So in the intermediate, you can hire a good advisor and learn from him what he is doing. And the only major advice I would like to give you before hiring a good advisor is ask him how many crashes he has seen, because any advisor must know what is the risk involved in the stocks he's advising. And I keep saying that finding a good advisor is really much more difficult than finding a good stock. So that was about a good advisor. And the next step is hang out with other lucky people. Lucky people means who have achieved the success, what you are looking for, not only in stocks, but in any field. Okay, you keep on reading the books authored by only those investors who have created exemplary wealth. Okay, they have created for themselves or for other investors. What I mean to say is, go for the books authored by Mr. Peter Lynch. He has authored 3-4 books. Go for the books written on the essays of Warren Buffett, how they can explain it in an easy and simple language to you, and so on. And then be patient. Yes, all these things, markets moving up, moving down, needs a lot of control on your emotions, and we have to have a patience for good times to come, and then take your call. And for your money to multiply, it takes time, so we have to be patient to let the compounding works in your favor. Your luck depends on sum total weight average of lucks of the companies in your portfolio. What I mean to say is very simple. Your total portfolio returns are decided by the individual companies' returns, individual companies' future prospects, individual companies' luck, which is decided by the management, which is decided by the products, the quality of the products they manufacture, the price they command. So look for the promoters, look for the CEOs which are going to be highly successful in times to come, because your success is dependent on their success. Forget your background. Yes, it is independent of the background. Don't say that I'm not qualified in finance, or I'm not postgraduate, or things like that. We all are managing the finances at our home. Yes, we all are earning, and when we are earning, we are making budgets, we are creating assets, we are creating liabilities, we have cash flows, and we are doing it successfully. If you are doing it successfully at your home, then you can do it for stocks also. Now, here is the gentleman. I hope most of you must have seen this movie, The Terminator, and he's Mr. Arnold Schwarzenegger, and he is basically Austrian, and then he moved to America. He was born on 30th of July 1947. He's an actor, he's a businessman, he's a politician, and he was the governor of California from 2003 to 2011. Now, let's see what he has to say. Very interesting.
People ask me all the time, what is the secret to success? And I always tell them, but the short version is, you got to have a 22-inch biceps. And you got to be able to kill predators with your bare hands. And of course, you got to have this charming Austrian accent. That's a given. The long version is that I actually always had 5 rules. You don't need to be a bodybuilding champion. You don't need to want to be an action hero or anything like that. If you want to excel in whatever you do, those rules are for you. So my first rule is find your vision and follow it. If you don't have a goal, if you don't have a vision, you just drift around. You're not going to be happy. I grew up after the Second World War. Austria, right along with Germany, lost the Second World War. There was, of course, depression. There was a terrible economic situation. I wanted to get out of there. I wanted to escape. And luckily, one day in school, I watched a documentary about America. I knew exactly that is where I wanted to end up. The question was just, how do I get there? How do I get to America? No one had the money to travel or anything. But one day, I was fortunate enough to see a bodybuilding magazine. And on the cover was this very muscular guy. Mr. Universe becomes Hercules star. His name was Reg Park. I read the article as fast as I could, learning about how he grew up in Leeds in England, poor, and how he trained 5 hours a day, every single day, and trained and trained and trained, and then he finally became Mr. Great Britain. and then became Mr. Universe. Then he won a second Mr. Universe title and a third Mr. Universe title, and then all of a sudden he landed in Rome in Cinecittà doing Hercules movies. And as I read, I became more and more certain. I had that vision very clearly laid out to be a champion on that same stage where he won the Mr. Universe, and then to move to America, then get into movies. From that moment on, everything that I did, no matter how hard I had to work or how much I had to struggle, it didn't matter because I knew what the purpose was and I found my passion. Always discover your vision and the rest will follow. Now my second rule is never ever think small. You have to go and shoot for the stars. I didn't just think about being in movies. No, I wanted to be a movie star. I wanted to have above the title billing. I wanted to become the highest paid entertainer. I basically wanted to be another John Wayne. What's wrong with that? Never think small, think big. A third rule is ignore the naysayers. I think it is natural that when you have a big vision and big dreams and you have big goals, that people are going to say around you, I don't think it can be done. I think it's impossible. I mean, it started right away when I was 15 years old and I became a bodybuilder. Right after that, when I said, I want to be a world champion in bodybuilding, I want to be Mr. Universe. They immediately said, are you crazy? Bodybuilding is an American sport, forget about it, it's nuts. And then when I wanted to go into show business, after I won 13 world championship titles in bodybuilding, I said, I want to be like Reg Park. I want to be a Hercules. I want to get into movies. Well, I tell you, when I met those agents and managers, their reaction was, oh, Arnold, that is so funny. You want to be what, a leading man? Oh, come on. I mean, look, first of all, let's start with your body. You're gigantic. You're like a monster. And then your accent, oh, it gives me the chills just listening to your German bullshit. Come on now. Have you ever seen an international movie star with a German accent? It doesn't happen. Forget about that. And then your name, what is it, Schwarzen, Schnitzel or something like that? People are going to storm the theater and the movie houses because Schwarzen Schnitzel is starring in a movie. Oh yeah, I can see that already. Imagine that. Everywhere I turned, they said, no, it won't happen, it's not going to happen, and forget about it. Luckily, I did not listen. I started taking acting classes, English classes, even accent removal classes. I ran around all day saying lines like, a fine wine grows on a vine. All of a sudden, I got a little break. All of a sudden, I got a TV show, a little part, then another little part, and then Pumping On and Stay Hungry, and then, of course, I landed the big role of Conan the Barbarian. So finally, I got the big break. And you know what was so interesting about it was the director said at the press conference, if we wouldn't have had Schwarzenegger with those muscles, we would have had to build one. And then when I did Terminator, James Cameron said, the I'll be back line became one of the most famous movie lines in history because of Arnold's crazy accent, because he sounded like a machine. So as you see, everything that the naysayers said was a liability became an asset. Ignore the naysayers. The fourth rule is work your ass off. You never want to fail because you didn't work hard enough. It doesn't matter in what area you're in. No pain, no gain. Listen, when I came to the United States, I remember that I trained 5 hours a day, every day, and I was managing a construction business and I was a bricklayer. And I went to college also. And I took acting classes from 8 o'clock at night to 12 o'clock midnight. Every day I did that. Work your butt off. That's what I always believe. No matter what you do, work. And my fifth and last rule is don't just take. Give something back. Tear down that mirror that makes you always look at yourself. And you will be able to look beyond that mirror and you will see the millions and millions of people that need your help. And this is why I tried to take every opportunity that I could to give something back. I started training Special Olympians. I started after-school programs for the most vulnerable children, for inner city children, to make them be able to say no to drugs, no to gangs, and no to violence. We all can create. People ask me,
So, how you can relate the story of Mr. Arnold with the steps we have jotted down here to create your luck. Many of these are matching with him. And I can recall even my case. It was around the year 2000 when I placed the idea of starting a newsletter at national level, starting publishing a newsletter at national level. At that time, there was no internet. And I coined this idea with my broker, and he laughed at me and he said, Mr. Asnani, do you think that by reading the annual reports on this floor, sitting on the floor, you can create wealth and you can guide other investors who are sitting at Mumbai? Can you imagine what they will do with your newsletter? They will tear it off when they say that, when they see that the newsletter has been published from Bhopal, they will tear it off. And as Mr. Arnold said, all those liabilities became an asset. And I also decided, I took the challenge to do it. And to prove myself, what I did was I introduced a basket of, at that time, of about 21 stocks and with a portfolio size of notional sum of rupees 1 lakh. That was the time when I decided to outperform BSE Sensex, because in the international market, it is said that no one can consistently outperform BSE Sensex or whatever the broad-based Sensex index is used in respective countries. Why? Because if we come to Nifty 50 or if it is Sensex, then each of the stock, each of the company is a leader in its sector. To outperform all those leaders, it is really very, very difficult. And some of the stalwarts have quoted that if you are saying that you have outperformed it, then you are a liar. So I decided to prove my capabilities, and we started with that basket named as Smart Billionaire Picks, and changes made only on Wednesday before 11 a.m. And we have done wonderfully well. And as I showed you in the screen, we have generated 25.8% CAGR returns for almost 20 years. Of course, we have not outperformed BSE Sensex in 4 of these 19 years. But for 15 years, we have outperformed. And whenever we have outperformed by very large margins with respect to the index. And that is how we have been able to grow from 1 lakh to 94, 95 lakhs today. And during the same time, BSE Sensex has grown from 1 lakh to about 15 lakhs. So that is how we have made more than 6 times better returns than BSE Sensex. Yes, as you may be knowing that hardly 1% investors amass a huge wealth, because 99% investors are naturally irrational. It is a natural thing. We surrender around our greed and fear, and that is how we become irrational, naturally irrational. It is only the 1% investors who are artificially intelligent. Now you can see here, the words are just opposite: naturally irrational and artificially intelligent. Why I said artificially intelligent? Because over a period of time, such investors, they start working automatically. They need not have to get a reminder that this is the time to invest, but they do it automatically. It comes in a routine way, I can say. When we drive a car, what we do, whenever the road is clear, we increase the accelerator to move the car at a fast pace. So that comes automatic. Same is the case with stock investors, stalwarts who are artificially intelligent. Luck is created by the prepared. This is a statement given by James Altucher, and to his credit, he is an author, podcaster, entrepreneur, and founded and co-founded over 20 companies, published 20 books, and also regularly contributes in Financial Times, Wall Street Journal, TechCrunch, and also the Huffington Post. So often it is said that be prepared, and whenever the opportunity comes, then you have to hit, and that is how the luck is created. Luck is a dividend of sweat. The more you sweat, the luckier you get. Ray Kroc. Luck is not found, luck is created, and so is money. Money is not found. You have to create wealth, and that is how I have given you the steps how to create this wealth. With the close of this presentation, this will be followed by question and answer session, and you can write in the chat box, or even you can raise your hand, and I will ask you to unmute. Thank you very much for sparing your valuable time. I have received a direct message. Truly admire your conviction, courage, and determination. Thank you. I cannot name him because it was a direct message to me. Okay. Mr. Jeet, kindly unmute yourself.
A very good afternoon, sir. Excellent session.
Thank you. Thank you.
And I'm just here to give a compliment to you, sir. I've attended so many of your two of your seminars and around 95 or 94 webinars of yours.
Okay.
And the knowledge that I've gained from you has given me the great confidence. Every time the market gives a big dip, I'm very confidently buying. Before meeting you, I used to hesitate. I will go down further. But after meeting you, now I have the confidence to dance with fear along with you, sir. Thank you very much, sir.
Thanks for the compliments, and thanks that we have been able to deliver what is required and what we have a vision.
Thank you very much.
Thank you. Okay. हम कैसे जान सकते हैं कि स्टॉक में अप या डाउन मूवमेंट आएगी? You cannot, in the short term, you cannot make out whether the stock will go up or down. But in the long term, if the company is performing, if the company has a strong credential, if the company has strong future story, then definitely it is going to move up. It is only a matter of time. And that is what I said. You need to have a patience. Hold it patiently. If you have done your homework well, then nothing can stop you from making money. I'm very happy to see the compliments received on chat box, and that is what our purpose is of this webinar, to give you the confidence, to give you the direction how to create wealth. Okay, we have already gone through this process. Already I have spent 30 to 33 years in my investment journey in stock market, and that is my passion to share whatever I have learned. The purpose of starting a newsletter, Smart Gains, itself was to share the learning from the stock market. At the moment, since the markets are at their highest and most stocks are at their premium rate, should we still go ahead with our investment plan or stop buying overvalued stocks? At no point of time during these last 20 years in Smart Billionaire Picks, I have ever advised to exit at no point of time, whether it was the 2008 peak or even during last crash when the Sensex fell to 25,900 levels. I never said that, or I never created a cash more than 1% in any of the schemes, So always remain invested and always remain invested in good stocks, in good companies with good stories, and above all, that stock should be undervalued. Is it necessary to follow technicals as fundamentals give very late clues? So it is very simple. Look for the investors who have created huge wealth, like Peter Lynch, Warren Buffett. There are many, many investors, even Rakesh Jhunjhunwala, and you will find that they never say to use technicals. They always say go through the fundamentals. That is the only way. And now you have written that it gives late clues. If you are invested in a good company, then you don't need any clue. If you are invested in Bajaj Finance since 2008-9, you don't need any clue when to exit. You have to exit only when the story turns negative. So as long as the story is positive, you have to remain invested with the company. Okay. Where do you see the future of Indian equities, especially with the China-US threat looming on world economy? See, that is what again and again I'm giving you an examples. We have seen the index rising from 100 in 1989 to 50,000 now. So Sensex has multiplied 500 times during 40 years. There were many, many threats during this time. What happened? Ultimately, as I said, believe on the corporate, believe on your business. Your business is also related, also dependent on the corporate profitability. That is the way. How to take care short-term tax gain issue. When I'm investing, I never look for saving on account of taxes. When I save tax, then I look for only saving the taxes. When I look for the insurance, I only look for first the pure insurance and then the tax. That should be the way. Kindly share about services options to get associated with you. You can visit our website, smartvrc.com, and you will get the complete details. Also, you can call me, and I have mentioned my personal number. You can call me here on this number 98935 12098. What is the rationale behind Adani Group shares? Are they fundamentally cheap or dear? We never recommend any stock in these webinars. We only give advice in our services, on our products and services. Mr. Deepak, you can kindly unmute yourself.
Hello.
Yes, sir.
Good afternoon, Asnani sir.
Good afternoon, sir.
I would like to thank you for the very precise, informative session. It was really enlightening and it had very precise stepwise guidance.
Thank you. Thank you.
Ultimately, wealth. Thank you very, very much. I would be keenly looking forward to visit the website as well as calling you to know how can we associate and get your valuable guidance. Thank you so much.
Sure, sir. Thank you. And how did you come to know about this webinar, sir?
Sir, I am on the Facebook and I noticed your post. So I am now following as well as also posting my views over the Facebook community.
Got it, sir. I can recall now very well. Thank you. Thank you very much, Deepak sir.
Thank you. Thank you so much, sir.
Which investment do we keep money in, and how much you suggest we should keep in terms of percentage to buy the dips or during crashes? Okay. As a thumb rule, what I have found useful is that you should average only if the share price is at least 15% down from your last purchase price. That is the way I do it. That may vary from person to person, but what I have found very useful and very efficient way of adding the stocks is 15% rule. Yeah, any other query? So with this, we have come to the end of the session. Thank you once again for your support. Thank you for sparing your valuable time. And okay, that is very interesting question. How did you manage to hang on when your portfolio was reduced to 21K from 180K? Yes, as I said, you should have a confidence on the companies you have invested. Stock market, if stock market is down by 55% or 60%, or if your portfolio is down by 80%, that does not mean that the world is coming to an end. That does not mean that the companies like HDFC Bank or many good companies, Larsen and Toubro, those companies are going to close their shutters. Never, they will never do. So you should have the confidence, because if such companies go bust, then definitely wherever you are employed, or whether you are an employee or an employer, you are also going to shut down your shutters. So if that be the case, then no need to fear about the stocks you are holding, fear about the job you are doing, or fear about the business you are doing. Which is the best business newspaper and business magazine? Okay, that varies from person to person. I also read the same papers what you are reading, probably the Economic Times, the Business Line, Business Standard. And as far as the business magazines are concerned, I don't read any business magazine, because most of the things are already available on social media. And at times I do read Business India. Thank you very much, friends, once again. Bye-bye. See you.